Current status of the Iraqi dinar. The Iraqi dinar has always been a topic of interest for currency investors and forex enthusiasts worldwide.
Hello everyone, and welcome back to the channel. Today, we're diving deep into a topic that many of you have asked about, the Iraqi dinar, specifically. We're re-looking at its status in early 2026, and what the future might hold for this intriguing currency. Is it the hidden gem some investors believe it to be, or are there underlying risks we need to consider? Let's break it down together. Right now, as we navigate the early months of 2026, the Iraqi dinar is trading at a rate of about 1,460 dinars for every $1. For a country that has navigated decades of intense political turmoil and significant economic headwinds, this level of stability is actually quite remarkable. It makes you wonder, what's holding it all together? The short answer, and it's a big one, is oil. Iraq sits on some of the largest proven oil reserves in the entire world. This immense natural wealth is the bedrock of its economy and the primary support system for the dinar. So, let's explore the key factors that are influencing the dinar's value today. First and foremost, as we just mentioned, is its dependency on oil revenue. The Iraqi government's budget is overwhelmingly funded by oil exports. This creates a very direct link between global oil prices and the health of the dinar. When oil prices climb, Iraq's income swells, foreign currency reserves grow, and this provides strong support for the dinar's value. Conversely, any slump in the global oil market puts immediate pressure on the currency. So, if you're watching the dinar, you absolutely have to be watching the price of crude oil. It's the single most important variable in this entire equation. Next up, let's talk about inflation. For anyone who remembers the hyperinflation of past decades, the current situation is a world apart. Inflation in Iraq has been relatively moderate lately. This is a positive sign, suggesting a degree of control and stability in the domestic economy. However, it's not all smooth sailing. We still have to keep an eye on government spending and the growing public debt. If spending gets out of hand without a corresponding increase in revenue, it could easily reignite inflationary pressures and chip away at the dinar's value. The Central Bank of Iraq's policies on interest rates and money supply are critical here in maintaining this delicate balance. The third major factor, and one that's impossible to ignore in this region, is the political climate. In Iraq, politics and the economy are deeply intertwined. Events like elections, the formation of new governments, and the implementation of economic reforms all have a massive impact on investor confidence. A stable, functioning government that can pass and implement sound economic policies sends a powerful positive signal to both domestic and international investors. This confidence translates directly into a stronger currency. On the other hand, any hint of instability, political gridlock, or regional tensions can scare investors away, putting downward pressure on the dinar. Foreign relations, especially with key trade partners and global powers, also play a huge role in shaping this perception of stability. So, what's the big picture for 2026 and beyond? When you look at the current exchange rate, it's clear that the dinar is still significantly undervalued compared to its potential, especially if you look at its value before the decades of conflict. Many analysts are watching for specific macroeconomic changes that could trigger a shift in its trajectory. These could include major infrastructure projects funded by foreign investment, successful economic diversification away from oil, or significant reforms to the banking and financial sectors. A long-discussed revaluation of the currency is still a topic of conversation, but it's a complex move that would depend heavily on all the factors we've just discussed lining up perfectly. In conclusion, the Iraqi dinar in 2026 is a story of resilience, potential, and risk. Its stability is anchored by immense oil wealth, but its future value is tied to the government's ability to manage its finances, control inflation, and maintain political stability. It's a long-term play that requires patience and a keen understanding of the geopolitical landscape. It's not a get-rich-quick scheme, but it is one of the most fascinating economic stories to watch in the coming years. What are your thoughts on the Iraqi dinar? Do you see it gaining strength, or do the risks outweigh the potential? Let me know down in the comments. Specifically, we're going to unpack what financial experts are predicting for the dinar in 2026. Will it be the year of the long-awaited revaluation, or is it just more speculation? Let's get into the details. First off, it's important to understand that the forecasts are mixed, but there's a definite thread of optimism running through them. So, what's the general consensus? Most economists are pointing towards a moderate appreciation. We're not talking about a sudden jump that makes everyone a millionaire overnight. Instead, many predict a steady climb of around 5 to 10% against the US dollar by the end of 2026. Why? A big reason is the massive effort going into rebuilding Iraq's economy. There are significant infrastructure projects underway, and a steady flow of foreign investment is aimed at creating long-term stability. Think of it like building a strong foundation for a house. It takes time, but it's essential for the structure to hold its value. These developments are slowly but surely strengthening the economic fundamentals that support the dinar's value. Now, let's talk about the big R word, revaluation. This is the scenario that gets everyone excited. While most experts agree that a dramatic full-scale revaluation is unlikely to happen by 2026, they aren't ruling out smaller, gradual adjustments. What would it take for this to happen? Two key factors stand out. First, political stability. A calm and predictable political environment is crucial for building investor confidence. Second, increased transparency from Iraq's central bank. When the central bank operates openly and clearly communicates its policies, it builds trust both domestically and internationally. If Iraq can make significant progress in these two areas, we might see the central bank start to methodically adjust the currency's value upwards over time. It would be a controlled process, not a lottery win. Of course, we can't discuss the Iraqi economy without talking about oil. Iraq is one of the world's top oil producers, and its economy is heavily dependent on oil revenues. The good news for the dinar is that most analysts project oil prices will remain strong through 2026. Higher oil prices mean more US dollars flowing into Iraq's government coffers. This influx of foreign currency is a powerful tool. It allows the central bank to build up its foreign reserves, which in turn helps to stabilize and strengthen the dinar. Think of it as the country's savings account getting a massive boost, giving it more financial firepower to support its own currency. A strong oil market provides a very favorable tailwind for the dinar's potential appreciation. However, it's not all smooth sailing. Experts are quick to point out the potential headwinds. The Iraqi dinar doesn't exist in a vacuum. It's connected to the entire global economy. A major international economic crisis, for example, could throw a wrench in the works. If major economies like the US or China face a recession, it could dampen demand for oil and reduce investment flows worldwide. Another risk is inflation. High inflation in major economies can lead to tighter monetary policies, which can affect emerging markets like Iraq. And let's not forget geopolitical tensions. The Middle East is a complex region, and any new conflicts or instability could quickly scare off investors and negatively impact Iraq's economic progress. So, while there's plenty of room for optimism, a cautious approach is absolutely necessary. It's a situation that requires constant monitoring. So, what does all this mean for you if you're thinking about investing? Forex analysts are pretty clear on their advice. The Iraqi dinar should be treated as a highly speculative asset. This is not a get-rich-quick scheme. The dream of buying dinar for cheap and cashing in on a massive revaluation is just that, a dream. For serious, long-term investors, the smarter play is diversification. Instead of putting all your eggs in the dinar basket, focus on building a well-rounded portfolio with a mix of different assets. If you are interested in the potential gains from Iraq's economic recovery, there might be other ways to get exposure, but betting everything on a single currency move is extremely risky. The key takeaway is to approach the dinar with a healthy dose of skepticism and prioritize sound, long-term investment strategies. To sum it all up, the outlook for the Iraqi dinar in 2026 is cautiously optimistic. We're likely looking at gradual appreciation driven by economic reforms and strong oil prices, rather than a sudden revaluation. But significant global and regional risks remain. As always, do your own research and consider your own risk tolerance before making any investment decisions. So, what does all this crystal ball gazing about the Iraqi dinar in 2026 actually mean for you? Whether you're an investor or just someone curious about the global economy, let's break it down. First up, for the investors out there, if you're holding on to Iraqi dinar, or thinking about it, the overwhelming consensus from experts is one simple word: patience. This isn't a get-rich-quick scheme. The potential here is seen as a long-term play, not something that's going to explode in value overnight. So, if you're looking for rapid gains, this might not be the horse to back. The key is to see it as a marathon, not a sprint. Another crucial point is research, and I mean deep, thorough research. The world of currency exchange can be tricky, and unfortunately, it's filled with scams. If you decide to invest, it is absolutely essential to only purchase dinars through official, reputable channels. We're talking established banks and authorized dealers. Steer clear of online offers that seem too good to be true, because they almost always are. Your financial safety comes first. And let's talk about risk. A smart strategy many financial advisors recommend is diversification. Don't put all your eggs in one basket. It might be wise to balance your dinar holdings with more stable, established currencies. Or, you could consider tangible assets like gold, which often acts as a safe haven during times of economic uncertainty. Diversification helps you spread out your risk, so you're not overly exposed to the fate of a single currency. Now, let's shift our focus to the bigger picture. What does a potentially stronger dinar mean for Iraq's economy itself? This is where things get really interesting. If the dinar does strengthen, it could significantly boost the purchasing power of the average Iraqi citizen. Suddenly, imported goods become more affordable, which can lead to a better standard of living. It also makes Iraq a more attractive partner on the world stage, potentially improving its international trade prospects. A stronger, more stable currency is also like a giant welcome mat for foreign investors. When international companies see a stable economic environment, they're more willing to bring their capital into the country. This could fuel a wave of investment into critical areas like infrastructure, think new roads, hospitals, and schools. It could also create much-needed jobs and kickstart a cycle of positive economic growth. However, and this is a big however, none of this happens in a vacuum. The success of the Iraqi dinar is deeply tied to several other factors. Political stability is number one. Without a stable government that can make and stick to long-term plans, economic progress is incredibly difficult. Hand in hand with that is the ongoing fight against corruption. Widespread corruption can drain public funds and scare away investors. So effective anti-corruption measures are non-negotiable. Finally, Iraq needs to implement sustainable fiscal policies. This means managing its money wisely, especially its vast oil revenues. The country needs to move beyond just relying on oil and diversify its economy, creating other industries that can generate wealth and jobs for the long haul. So, to wrap it all up, what's the final verdict for 2026? While it seems highly unlikely that the Iraqi dinar will experience some dramatic, overnight revaluation that makes everyone a millionaire, the signs are pointing towards a year of gradual strengthening. There's a sense of cautious optimism in the air. Both investors and economists have their eyes glued on Iraq, watching how it handles the complex dance between its oil wealth, its political reforms, and the ever-shifting tides of the global economy. The journey ahead is complex, but the potential for a brighter economic future is definitely there. Thanks so much for watching. If you found this breakdown helpful, be sure to hit that like button and subscribe for more deep dives into the world of finance and economics. See you in the next video.